Thinking about using down payment assistance to buy your first home? Is it a great opportunity or a financial trap? In this video, I'm sharing the truth about down payment assistance programs, what they are, the pros and the cons, and what questions you need to ask to make the right decision. Hey everyone, welcome back to my channel. I'm Shaquila LeBlanc, aka the Loan Slayer, and today we're diving into down payment assistance, aka DPA. I'm going to discuss, are these programs really free money? How do you choose the right program for your needs? And how can DPA compare to saving for your own down payment? By the end of this video, you'll have a clear understanding of whether DPA is the right move for you. Let's jump in. So what is down payment assistance? Down payment assistance programs are designed to help homebuyers, particularly first-time homeowners, cover the upfront costs of buying a home, like the down payment and sometimes even closing costs. There are hundreds of programs across the U.S. funded by federal, state, local governments, nonprofits, and even employers. But here's the thing, not all DPA programs are created equally. And understanding the different types is key to making an informed decision. Now, there are 4 main types of DPA programs. Number 1, we have grants, which is free money that doesn't have to be repaid, which sounds great, right? Generally, they are, but they often come with special criteria like income limits or living in a specific area. Number 2, forgivable loans. Loans that are forgiven if you meet certain conditions. Usually, it's a residency condition like living in the home for 5 to 15 years. If you do not satisfy these conditions, then the loan must be repaid. Number 3, we have deferred loans. Loans you don't have to repay until you sell, refinance, or pay off your first mortgage. And lastly, repayable loans. Loans that require monthly payments alongside your mortgage. This means the payment will be included in your DTI or debt to income ratio. Knowing these options will help you evaluate whether a program is truly beneficial. Now let's get into the pros and cons of DPA. And we'll start with the good stuff because DPA can be a game changer for the right buyer. Pro number 1, it lowers the barrier to homeownership. DPA helps you get into a home sooner. So if saving for a down payment is holding you back, these programs can make homeownership possible without waiting years. Which leads me into pro number 2. You can build equity sooner. The sooner you buy, the sooner you start building equity. Waiting to save could mean missing out on years of appreciation in home value. And pro number 3, it can actually improve your credit worthiness. So for a lot of DPA programs, you have to meet a higher credit score, whether that be 620 or 640, which means that as a borrower, you could be in a better position credit-wise because it forces you to work harder to achieve your credit goals instead of moving forward with a lower credit score. Now let's talk about the cons of DPA. Because DPA isn't all sunshine and rainbows, here's what you need to be careful of. Number 1, higher interest rates. Many DPA programs come with higher interest rates, which mean you could end up paying more over the life of the loan. For example, a rate that is even 1% higher than the market rate could cost you hundreds of dollars more each month. Number 2, repayment streams. If your program involves a forgivable or deferred loan, you may have to pay it back if you sell or refinance before meeting the terms. Some programs even require you to share a percentage of your home's equity when you sell. Please be aware that for a lot of these loans, you cannot refi the loans either, or the funds will need to be paid back. Con number 3, additional requirements and documentation. DPA programs often add extra layers of documentation and guidelines. So in addition to meeting the requirements for the loan program like FHA or conventional, you would also need to meet the down payment assistance program requirements. This could be income limits, credit score requirements, providing tax returns, additional bank statements and explanations, etc. Number 4, there may be a second underwrite. So for some of these programs, they often require a second underwrite. That means after your initial loan approval with the lender that you're working with, your file has to then be reviewed and approved by the DPA program as well. This can add extra time to your process. Number 4, limited availability of funds. Many programs have income limits, location restrictions, or limited funding. So you may not qualify or the funds might run out before you apply. Now, I also want to share some questions that you should be asking before choosing a DPA program to avoid surprises. So here are some key questions to ask your lender or DPA provider. Number 1, is this a grant or loan? Number 2, if it's a loan, then you need to know, is it forgivable or non-forgivable? Number 3, what are the income, credit, and DTI requirements? Number 4, are there any conditions for forgiveness, like staying in the home for a certain number of years? Number 5, will this be a second lien on the home? Number 6, are there any restrictions on where I can buy or how much house I can afford? Number 7, are there any additional origination fees? Number 8, will the assistance impact my debt to income ratio or monthly payments? And number 9, are there any other restrictions on the sale of my home? And pro tip for everyone out there watching, always read the fine print. Understanding the terms up front will save you headaches later. So is DPA right for you? Should you use your own down payment assistance? Here's a great way to help you decide. If saving for a down payment will take years and you plan to stay in your home long term, DPA could be a great option. But if you qualify for a competitive rate without assistance and can save your own down payment, get a gift, or borrow from your 401k, it might be better to skip the extra strings attached. At the end of the day, the best option depends on your financial situation, your goals, and how long you plan to stay in the home. If you're curious about other ways to make homeownership easier, check out my video on calculating your DTI and my top tips for first-time home buyers. They're packed with practical advice to help you navigate the home buying process. Don't forget to subscribe and leave your questions in the comment section below. And if you're looking to buy, invest, or refinance, my link is below. I'd love to help. See you guys in the next video.